Hello, audience. Hello, everyone. I'm so excited to be here with you on this Tuesday, right after the end of the quarter, or maybe if you're following the Salesforce calendar, the beginning of the last month of the quarter. Thank you for joining us today. I am so excited about this panel and all the key takeaways you, audience, will get from this conversation here today. And while I'm doing some introductions in here, audience, why don't you go to the chat and tell us where you're calling from? We love to hear from you. And also, this is a reminder that the chat is wide open, audience. So please go there and tell us, ask us all your questions. So let's get started here. Today, we're here to talk about Sales Quota Simplified, setting quotas to boost motivation. Let me get my slides up. With this awesome panelists, we are so excited about the amazing content and takeaways you will get out of this event. Today's event is brought to you by the team at Modern Sales Pros. For those of you not familiar with MSP, we are the world's largest and highest quality community for those in sales management, sales leadership, sales and revenue operations, and sales enablement, aka our Modern Sales Pros. And our mission is to create an environment for our members to answer the toughest revenue questions out there and to help them see around corners they might not know about. And we do that through live sessions like this one you're about to experience. We have a robust online forum, and we have quarterly summits. We have our summit coming up on April 18th. I'm going to put a link in the chat right now. Oh, we have people from Boston, Phoenix. So I just put a link in the chat right now so you can sign up for our upcoming summit. And you can hear from sales leaders at Sales Loft, Outreach, Gangside, Stage 2 Capital, and so much more. It will be more than 20 sessions, so don't miss out. This summit will be amazing. But enough about MSP. This event today is sponsored by our amazing partner at Spiff. I have Matt in here from Spiff to give us a little introduction to Spiff. Matt, why don't you introduce yourself and then tell us a little bit about Spiff?
Sure. Thanks, Eduardo. Matt Garr, CRO from Spiff. Very happy to be here today and talk about quotas. My quick backstory, I've been in tech sales for 25 years, two different stints from 25 million to 1 to 450, another to about 200 million. Was actually a Spiff customer for 2 years. Have used some of the old technology and spreadsheets and all the things that are out there, and was a Spiff customer for 2 years before joining as CRO just in May. So Spiff is the fastest growing modern commission platform in the market today. What the solution does is drives transparency throughout the commission process for sales teams, also visibility and predictability for those finance and rev ops teams that have the burden of managing commissions amongst many, many other things they do today, largely in Excel. So we replace spreadsheets for smaller companies. We replace old technology in mid to larger size companies to drive a seamless, data-rich process for our customers. It's relatively light lift to implement and very easy to self-manage. So we really want to put the control of the commissions process and motivating your teams in the hands of our customers. That's a little bit about Spiff.
Awesome, thank you. If you want to learn more about Spiff, there's a request a demo with our sponsor button at the top of this page, and you also can visit the sponsor booth. They have some resources out there for us. On that note, let's hear from the other speakers. Jacinta, why don't you go ahead and introduce yourself?
Hi, I'm Jacinta Tobin, or JT for short, and I'm CRO of Leo Labs. We're a space domain awareness company.
Awesome, thank you. Where are you based, Jacinta?
I'm based in San Francisco.
In San Francisco. Good, good. It's a great city. I'm going there next week. Let's hear from Bas.
Yeah, thanks. Super excited to be here. I'm Basil, but again, Bas works great, CRO at ARC. We're building the digital version of Silicon Valley Bank. So it's been a busy couple of weeks over here. And I'm based in Marin, just north of San Francisco.
I can imagine you must be very, very busy now. Awesome. So let's start with this panel. Let's introduce quotas to the conversation. We live in a world where the wrong quotas can mean the difference between a sales team full of high-fiving, quota-crushing champs or a team of desperate job seekers. And we get that in this world, we get sales and RevOps leaders struggling to find the sweet spot of aggressive while attainable quotas. And it's hard, like with only a quarter of sellers achieving their quota last year, it's unsurprising that quota setting is the top challenge for leaders going into 2023. But if setting quotas is so important for forecasting and planning, why do so many organizations still get it wrong? And we are here today to answer these questions. So for the agenda, we have why setting quotas are they are realistic and aggressive is so important for business, what metric or metrics is everyone running after in 2023, and how can you adapt your quotas strategy to attract, retain, and succeed with top talent. So I'm pretty sure the panelists are very excited. So let me jump right into the questions. Matt, would you tell us a little bit about your role? Like, what are the key priorities and how does quota setting tie into your role? What do you do at SPIF?
Yeah, happy to. So I have that funny, I guess there's a lot of them out there, that title CRO, which can mean different things depending on which organization you're within. So to be clear, I lead the teams around new customer acquisition. That's both the AE team and our sales engineers, as well as our commercial customer growth. So our customer AE or AM team as well. And then have partnerships or, channels, alliances, and sales enablement and sales ops. Those teams are all kind of part of my direct remit. So my key priorities in this role are ARR growth, both new and expansion. I partner with our CS lead to drive NDR, kind of ensuring we're bringing the right type of customers in that are going to be a good long-term fit and expand their the value they get from our solutions and the revenue profile that we work with them on. So ARR growth, NDR, we're very focused on operational and sales efficiency. So kind of that growth over the spend ratio. So, all of the teams that I lead specifically tie to, quotas, goal setting, and largely our comp mix 50-50, right? 50% base, 50% commission to lead to their total OTE or on target earnings. So there's, quotas are something that are in play. Even my teams that don't have direct field quotas have MBOs tied directly to the results or outcomes of the teams that they support. So quota conversations are very much part of our daily, weekly vernacular. I guess in addition to that, or incrementally, because SPIF is a commission platform, we work every day with people that live in the world of quotas, success against quotas, commissions, and compensation for those companies. So the natural captain obvious is compensation drives behavior and organizational outcomes. So if you ensure you've got alignment there with your commission plan, then you should be able to drive incremental out the other end. So that's how quotas line up with the role I play.
It's interesting that you say that being a CRO means different stuff in different organizations. Usually, with your experience seeing other companies, do you feel like the quota setting it's basically falls under the CRO umbrella, or do you see more sales managers doing the quota setting? How do you see that in the other companies that you work with?
Yeah, for me, it's typically a partnership with finance to FP&A, depending on where. What roles those play. So yeah, the CRO tends to own establishment of quotas, adjustment of quotas in year or for the coming period, but in very tight partnership with finance and obviously oftentimes the board as well, because you need to understand and be clear on what are the objectives of the business and how do those translate into quotas. So yeah, for the last few years, I've certainly been driving quota establishment. I mentioned that about CRO because sometimes marketing trees up to CRO, sometimes CSM trees up to CRO. There's all different types of permutations of the role. So that's more why I pointed that out. But yeah, quotas tend to live in these roles directly.
All right, awesome. Jacinta, what are about your role? How is quota setting tying to your role as a CRO at Leo Labs and your previous experiences?
Yeah, so I have three numbers. One is the revenue number, the other is the multiplier on the revenue, and the third, which I hold near and dear to my heart, is 100% OTE achievement. So I take that as a number that I take on personally. So setting the right quota is near and dear to my heart because I feel responsible that I hire the right people and I enable them to earn 100% of their quotas. So it's a mix of an art and a science to figure out how to set correct quotas.
Yeah, and I'm pretty sure it gets really hard with different business models and stuff. Thanks for sharing. Bess, what about you? How quota setting tie into your role? You work a little bit different. You are in a little bit of a different environment here. How does quota setting tie into your role?
Yeah, for sure. So my role is owning acquisition and like client retention. So said differently, SDRs and AEs, and then CSMs, or relationship managers, on the other side of the transaction. That's our sales organization. I also oversee partnerships. So partners that drive volume into our funnel, and I run our marketing org as well. So a lot of different hats at the day-to-day. Of course, it's because I'm the CRO of a Series A early stage startup. And to your point, Eduardo, our business model is a utilization kind of based revenue model. It's not a contracted revenue model, which inherently implies that the way we think about quota setting is very kind of unique to this type of revenue model. My goal, the whole reason like my role exists in the company is to figure out how to work backwards from the goals we need to hit as a business and turn that into like achievable revenue results for our sales organization, and make sure that sales org is fed correctly by our marketers and by our partnerships efforts. So I own the revenue number for the business, and my goal is to figure out how we get to that revenue number, but derived very directly from that. I'm also, strongly encouraged, in fact, required to get to that revenue number in an efficient way. And so it's this question, I think, to Jacinta's point, revenue and revenue multiple are kind of the two things that I spend a lot of time thinking about. And proportional to that, making sure that we're hitting lifetime value to customer acquisition costs, like ratios that are well within the sweet spot of what we're shooting for. So a lot of different parts to it. And I'm very grateful that I control the upstream and the downstream from the sales organization. But at the end of the day, are we hitting our revenue target? How do we set quotas across the team that match back to that and get there as efficiently as possible?
Yeah, that makes sense. And it's interesting that you mentioned the business goals, how you tie your quota settings to the business goals. Jacinta, what do you see like as fundamental? What does a sales leader need to know before they start planning the quotas for the quarter or for the year? What do you think is like the first step that a sales leader needs to look at?
So I think that, I think there's been a trend that I have fought against from VCs in the industry where, there was considered, well, you just bring in more AEs than you need, and with the assumption that that on average people would be at 70% of quota. And I understand how that evolved, but I disagree with it. I think if you're a skilled CRO, you're hiring the right people and you're enabling them correctly to reach 100% of their OTE. And I think it's irresponsible to hire people with the view that on average people only make 70% of the OTE. I think that's unfair in a hiring process. So I've actually successfully argued against it. But I understand why that evolved, and that's about, people presuming, okay, 7 out of 10 salespeople will be successful, so we need to hire 10 to make up for the fact that 3 will be unsuccessful. But I find that that premise really depressing, and I kind of like to go the other side and say, well, I want my team, I want 10 out of 10 to be successful. There's always people that are going to be unsuccessful, but I want some people exceeding their target and exceeding their OTE. And I much rather drive a team with that kind of positivity and success mode than presuming failure at the outset. But the first thing is looking externally at the market and what the market will bear. It's not the sheer numbers of I'll hire 10 people and I'll make 10 million sales. It's about really understanding the market. So I took on this new role recently, and I'm not looking at people's quotas first. I'm looking at what I sense the market can bear and deliver. And then also look at the sales enablement or lack thereof of current folks. And I work in space, so I kind of give the analogy to my CEO about we have a lot of rockets, but no fuel. So I've taken on marketing as well. and really making marketing into a true sales enablement organization that is, account-based marketing, etc. So that has to be there for me to set fair targets, because if I know that I have fuel in the rockets and I know that I know the market, then I can set fair quotas. So it's very much understanding the external first, and then understanding what resources my team need to be successful, and then setting what I think the team can actually achieve.
Yeah, that sounds like a very holistic approach, looking at what you have available, what you're working with before setting the quotas, and also having this mindset that you're looking for success. You're not looking to have people fail. So it's interesting that enablement also it's part of your quotas setting. Matt, in your experience, how do you see quota setting? Like, what are the basics? What a sales leader needs to know to start planning quota?
Yeah, I'm going to jump in first with, I think right now, and I'm glad JT brought it up, the concept of enablement has to permeate everything we're doing. And I was in an early days SaaS play where literally we were public, and during the analyst investor meeting on a quarterly basis, they would ask what the hiring plan was as an indicator of growth. And to your point, we overscaled and we made that fun mistake, and it had a meaningful impact on turnover and all the negative things that come with that. So yeah, I think the market has really finally adjusted more and more to it's not just about putting more feet on the street, and we're in an environment now where I would argue for an incremental ops player or enablement player before I would argue I need 3 more AEs on the street just to put more quota out there. So it's good, and I can corroborate that trend. I will say, JT, though, it's thinking everyone can get the plan. I love it. It's refreshing. I wonder at scale how easy that is to achieve. And in my mind, if the average is 100, you're moving the standard normal distribution to some extent, unless you just believe your entire team is only at the top end tail, which is amazing. But I don't know when you get to 30, 40, 50, 60 AEs, if that's a sustainable.
No, Matt, it's really, really hard. And yeah. I have never fully achieved it. It's just I feel it's my responsibility to enable it. And the other thing is, I am wanting people to overachieve. So in the average,
it's still a distribution, right? You've got some at 200 and some at 130, some at 100 and some below. But it was a refreshing statement, and I bring it up to make it a dialogue here because I think it's and I do agree. It is part of my role to achieve that, but it is also part of their role to ensure that they're doing everything they can each and every day with the tools provided to get them there as well. But no, I love it, and I love when you can help your mindset change a little bit. Just back to the question, I think the big thing, and we'll get into objective setting, but when you're setting quotas, you do have to think about the year or the period to come and what your true objectives are. What is going to drive the business? Is it bookings? Is it ARR in one time? Some of this will have to do with the stage that you're at as a business. So I'll give one example. At Cornerstone, we grew, pretty good sized business, 25 million to 475. And we had a mixed quota for years, software and services. And we got to a size, and, at the time, this was early SaaS days where all revenue was attractive. We got to a size where we were having to replace our services revenue because it gets up and then it falls off, right? So every year to achieve 30% growth, you have to replace services and grow your ARR. So we adjusted quotas naturally away from those one times. So it's just an example of the need every year to contemplate what's that revenue mix you want as a business that drives your value or whatever outcome you're trying to drive, and that you're adjusting quotas as a result. So it's just part of the gig. I think that you have to keep an eye on that all the time, Eduardo. So.
Awesome, thank you. Bess, what about you? You already established that it's a little bit different for you, quota. What is the beginning of the quota setting for you in your role? I know that you're in the beginning of your quarter now, so what are you doing?
Yeah, for sure. No, I appreciate that. And I do want to just comment on a point that you made, Matt, which I think is really refreshing. And I think, consistent with how I think about this, which is, quota is really two things. It's what is the goal, but then it's also how do you work backwards from that goal to communicate to the team very clearly, like what you need them to do in support of that goal, right? Like we can throw darts all day and put a number on the board. It doesn't mean that that number is either realistic or that there is a clear path for a rep to follow to get to that number. So like figuring out the laddering up of, what does it mean for people to do their jobs correctly, and the confidence that if they do those things correctly, they will perform to that particular target, I think is really, really essential. To me, one of the things I've seen in my career that's been, problematic is this spreadsheet exercise kind of top-down approach to goal setting, which isn't necessarily informed by the required activities and inputs upstream to drive towards that kind of number. And it's so important to kind of socialize the final goal with that particular, point of view. But that said, I think you're right. I mean, our business is inherently different. I called that out earlier. As a fintech that has bank-like revenue dynamics, we make money in two ways. Credit, so what we lend and the price we pay on that money versus the price we collect from our customer, minus the losses that we incur on those loans. And then deposit revenue. So obviously a very hot topic these days, but the money we earn on deposits held in ARC related bank accounts. The inherent challenge with those two things is they're very much a moving target. They're not contracted, and they can change on a dime. Take the banking deposit question, right? You could put $3 million in it today. You could move $1 million out tomorrow. How do I figure out what the average value of an expected customer needs to look like and how to compensate accordingly? So I think the biggest dynamic that we have to solve for is the lack of predictability of revenue and the lack of, especially when you layer on the fact that we're an early stage company, the lack of historical line of sight into lifetime value of a customer without contracted kind of revenue underpinning that estimate. On the flip side, on our credit business, right, we have this other inverse trend, which is really, really difficult. And I've never met a business other than a credit business where this is true. We don't just have to find people who want our product has to want them back. And typically, the more credit seeking you are, the less likely you are to get approved for the credit that you're seeking. And so it's this weird mix, especially as we work upstream with like our demand gen teams, whether our SDRs, our marketing org, or even partnerships, like finding customers who have the right level of intent, but also the right credit quality underpinning them so that we're not spinning our wheels on a bunch of customers that, kind of get spit out of our funnel, not by any fault of their own, but because they don't fit the kind of box that we're looking for. Between like really challenging qualification questions and then this utilization-based revenue dynamic across these two products, it makes for a very unique mix. I think the first thing we start with, right, is like, and maybe this goes back to JT's question a little bit, what type of revenue do we want more of this year? What do we think is the best outcome for us as a business, knowing we can kind of press on both these gas pedals? Which gas pedal do we want to like emphasize more? And that's the first decision. For us this year, given where the macro is, given kind of underpinning like economic trends, we're really aggressively growing our bank deposit business. And so we are incentivizing and rewarding and just generally solving for that number being the thing that will get us to success and, by December. And so like kind of starting from that, we then look at, okay, what team do we have? What is the revenue goal that we're looking for? What are the historical trends in this business that have informed revenue performance? And then we kind of burn the candle at both ends, right? We think about, okay, how have we gotten to X in the past? What did it take to get there? And if we were to just model for the past, what do we think we could get to? And on the flip side, what do we have to get to by the end of the year? And what does that imply we have to book every quarter, every month, every day in order to make that number happen? Now we have here's what's historically possible versus here's how we have to get to, by the end of the year. And we split the difference between the two and trying to find a quota that makes sense. And again, emphasizing certain lines of business over others as the North Star that informs how we spend and how we set goals. A lot of info, but hopefully that kind of helps paint a picture a little bit.
Yeah, that's very interesting. And keep on this line of moving looking at quota setting from different angles. Jacinta, I want you to put your board member hat here and tell me a little bit like how boards are looking at quota setting, how the discussion in the board meeting it's coming about, like about quota setting.
I think it went, and I'm not talking about the Leo Labs board here. I'm talking about in general what the VC community pushed, and to Matt's point, the trend has shifted, but there was this idea of there was some sales best practices books written about, you should always hire beyond people's ability to achieve OT. And what I mean by that is, the best practices seem to be, if everybody's at, a VC told me last year, if everybody's at 100% on average OTE, that means you haven't hired enough salespeople. His point was, that's an indicator that you should have hired more because the market can bear more. And I actually had to push back quite strongly against that and say that is actually, best practices in my view is on average, you have hired just enough for people on average across the group. It doesn't mean everybody achieves their OTE, but it means that some people are exceeding, some people are at 100, some people are lower than 100, but the team is making their target. That's what success looks like. However, a lot of, there was VCs were coming out with best practices around, well, you need to hire ahead. And, the best practice is that you, on average, are paying 70% because that means you're building and growing for the future. But I actually think that salespeople are not coin operated, they're success operated. So they're hungry for success. And if people in a team feel that they're behind target, they lose fuel. Fuel starts leaking. So this has been something, what boards have started to talk about, that when I do talk to those board members or VCs, I try and change their minds back to the days when people were at 100% OTE and companies didn't burn fuel on bad sales hiring or over hiring or going in above the skis on the number of sales reps versus sales enablement, things like that. So it's kind of I'm bringing temperance in to those board conversations about what good practice around sales comp looks like. And it's not just out of my loyalty to my individual team members. It's, I think success begets success. And that is kind of a variable or an intangible that I've had to remind people of.
Yeah, I couldn't agree more too. The nucleus too that you start with. So to your point on success begets success, because we had a solid year last year, but I think we before I joined, but I'll own it all, right? We had overhired. There wasn't enough pipeline. We were starting to get into this, we were not successful enough, even at the averages type level. And that's why we've decided, as we had some attrition, not to strictly backfill to focus on, to your point, kind of driving a higher efficiency for the business, but higher productivity across the team so everyone could feel more successful, because that will then lead to more engaged and excited. And I totally agree with you. And I'm glad you call it out, that it's more about, we'll call it quota achievement than commission, but it is that sense of achievement, right? I think is the number one driver of sales professionals. They could have a great year financially, but if they're 90% of plan or 85% of plan, that's going to be the thing that kind of sticks at them. Now, of course, oftentimes that creates motivation for the next year, right? So, but I totally agree with you. I think it's a challenge. I think that one of the things, since I'm just riffing here, Eduardo, I hope that's okay, is the change year over year from our friendly investors. And it is just amazing, because this time last year, maybe not quite now, but a month ago, 2 months ago, it was just, why haven't you hired more people? And having gone through a lot of conversations in Q4 about this year's plan, far more focus on efficiency, which I think aligns better, JT, with what you're saying, which is like, let's help the people we have become the most effective they can, and then add incrementally, as opposed to just throw 30% more capacity on the table and water ourselves down. It may lead to an initial a booking or two or some more revenue, but to what end? To what cost?
Yeah, I think that's such a good call out, Matt. And this year, really the last 12 months in particular, have been a very different kind of modus operandi for us, like CROs and revenue leaders in general, given kind of like the investor pressure I think we've all had to contend with. The reality is, the rule book changed pretty meaningfully. I was used to being a lot less lean than I am today when it came to thinking about how to ladder up to revenue, right? Like the emphasis on efficient revenue growth has just massively overtaken the conversation. And it's hard, right? It's a lot harder. I mean, I see it definitely on the revenue side, like on the sales side directly, but even more on what we're expecting out of our marketing organization and out of our partnerships organization. Like that has been night and day from where we were at last year. More specifically, right? Like you can't spend money inefficiently to drive pipeline, which then in turn is this like kind of interlinking relationship with what you can expect on the sales side. If you think about, the acquisition engine as like a bunch of different channels that you have to ladder up together, some of which are more efficient than others. If you're all of a sudden eliminating some of the less efficient channels, you're able to, to use JT's kind of analogy, put a little bit less fuel in the tank. And if you have less fuel, doesn't matter how many salespeople you have, ultimately you can't feed as big of a team, right? So there's this, by kind of setting the bounds tighter on what we're willing to tolerate from a spend perspective to drive pipeline, we're also inherently more limited in how we can think about what each salesperson can and is able to do to drive towards like the overall kind of revenue goal. I think that's been a huge new dynamic for me, for my team, and for every leader in the space that I've talked to.
Yep. So JT, one thing you mentioned, is it about total compensation? Meaning when you total up everyone's money they made in a year, that's where you want 100%, that to be 100% of OTE, right? For at quota. Is that kind of the thought?
Yeah. Yeah.
Okay. Got it. But what if, just total what if you have 10 AEs and every one of them hits 100% of quota, of production quota? Was there capacity there potentially? You know what I mean? Is the quota too low? Just a total. And I'd love to riff off this because I'm curious.
Yeah, I think that's why this is art and science combined. I don't know that there's a right answer, and it depends on many variables. I think that what I'll answer it in the positive first. Yeah. Is if we have 10 A's and they're at 100%, that means that our formula works. Our customer success managers and our marketers and our PR air cover, as well as our, SEs and sales folks, we have that working. We figured out a formula that works. So as we hire in more AEs, we are bringing them into a winning formula. And I think sales playbook is such an oversimplification because that splits sales and marketing and execs. Like I kind of, joining it all together holistically, do we have a successful go-to-market motion? And that I feel positive then that I can hire 10 more next year and they will be, successful, maybe not equally, but that I'm confident that we have good bedrock. Yeah. However, earlier in my career, I did make the mistake of underhiring. And, are we ever sure that we can make our number the following year? It's always a gamble, and we kind of try and get smarter as we go. I also made the mistake of overhiring. So I try and calibrate and recalibrate every quarter and figure out, first of all, do we have the winning formula? Should I be hiring in more people? Or if I hire in more people, I might just like less fuel all around, and are some people going to be unsuccessful? So I wish I had an easy answer. And I wish I had 10 years of under my belt.
I appreciate it.
I'm curious to ask you guys both, because I think that raises an interesting point for me, which we've been debating with our finance team a lot lately. Like, is there such a thing as good enough when it comes to sales efficiency, right? Like the reality is, from a spreadsheet perspective, you can think about, okay, like we have an LTV to CAC target of, 3, 4, 5, whatever. If you're able to book revenue at what is considered an efficient enough number, then does that, and then you continue to actually like hit plan, to your point, Matt, like, does that mean that you should be expecting more from your team? Do you need to be expecting more if you're within the bounds of what is considered like efficient revenue growth? I just wonder how you guys think about that particular dynamic with respect to quota setting.
Well, so somebody's, I've only ever had targets going up every single year. So somebody makes 3 million sales and they're 100% a target, like it's likely their target's going to go up, perhaps double the following year. So, and I don't like to do that as an auto thing. So I don't double my team's targets every year, but, typically a company's target doubles, triples every year. So sometimes it's not as simple as adding more people. Sometimes it's saying, okay, I have these reps fully ramped now. The formula is working. They did 3 million last year. I think they can do 5 million next year. So I'm putting targets up. I don't believe in keeping targets static. And I was recently in a company where it was like, this is the formula, this is the package, and this is what this rep brings in, these reps bring in every year. And it's a stagnant number year on year. And I don't believe in that either.
Yeah, I think I agree. I think as we thought about efficiency in Q4, we achieved a very solid kind of average AE performance against street. It was over 85%. That's quota against street for the quarter, right? So I was pleased with that from an efficiency gain. But I think you still have to find, tied to tenure and experience and market exposure. I think it's fair to expect AEs to become, all of us, right? Human beings to become more efficient. If you think about it, in the role that they play, close rates higher, ACV higher. We've got incremental products. So are you able to position those services and solutions in a way successfully? And that to JT's point, the machine's getting better too, right? The whole go-to-market motion. Marketing's getting better at identifying ICP sooner. Anyway, so I do think it's not anymore just about increase it, but how do you ensure that there's levels of efficiency improvement that are expected in all pockets of the organization? And that's another thing that I spent a lot of time on, is how are our trends around these efficiency KPIs, and are they going up? Because if they are, the engine's getting bigger, getting better rather, and maybe now it's time to add more, potentially add more fuel. But it is, Baz, it's such a tough thing, because if there is a point, I think, where if everyone is crushing everything at all times, you are missing out on market opportunity. There's somewhere there, and I don't know where that point of resistance is. You know what I mean?
Yeah, and I would caveat that I've never had a situation where you have 5x LTV to CAC and 100% quota attainment across the entire team. Like, that'd be awesome. So maybe it's a bit of a fictitious kind of exercise. So makes sense.
Might be.
Awesome. So you guys have been talking a lot about success and achieving and being efficient. I want to ask about metrics, because that's how companies will measure if the team are being successful and all. So what will be a good way to find the most relevant metrics to motivate your team, or that fit the business models that you are working with? Do you guys have any tips or how to look at metrics in a way that is efficient and will help the quota setting? Let me start with Matt.
Yeah, so we've hit some of it, I think, in the dialogue, but I guess I would say it's vital to speak with your senior leadership team, your CEO, your CFO, your board, and understand what drives the value of the business and what are you really trying to drive towards, right? So typically that's, the value of the business. What's the multiple going to be from an exit perspective, or the value to the shareholder, or the value to the stakeholder? But ensuring you define that and have alignment with that at the board level, and then take a step down and say, okay, which of the objectives that I'm going to quota around tie most directly to that at the team level. And it's really interesting, because in what I get to do every day, when I talk to CROs, I'm always talking about commissions, which are downstream from quotas, of course. Too much historically being that, pot of gold at the end of the rainbow. The AE doesn't know exactly what they're going to get, but all of a sudden they come upon it and there it is. And we drive, transparency, and we bring that process closer to the day-to-day work. But I always say it, but the assumption here is that your commission plan and your quotas are aligned with your revenue objectives. Because if they're not, you have a fundamental issue there. So I think that's one thing. It's very common to just quota the same things and commission the same things year over year and add one little caveat or one little nuance to it that you think enhances the plan. So I think it's important to talk to the board, important to understand what's going on in your business. I have a quick example. I was with Burst, and we worked in travel and expense when COVID hit. And as everyone knows, right, business travel dropped to 5% of historicals. So but we had some things that we could do. We had good assets, other solutions to sell. Card was starting to become, so there was still spend going on, but people were organizing it in a different way, and there was less emphasis put on travel. So we very much focused quotas on and accelerators and club qualifying, not just on ARR, but ARR with some more specific product-oriented targets. And we knew we'd see smaller units, so we were like, okay, well, let's try to grow the ARR footprint of that new booking through incremental products. And we saw our average kind of products sold for new unit go from 1.2 to 2.7 in 1 year. And that was largely tied to quota setting in an environmental situation where we knew just selling a bunch of travel and expense deals wasn't going to work. You know what I mean? So I think you have to do the board thing and your objective. You got to read the market too. Am I going to go lower units, higher ACV because of the nature of what the year is? What's feasible. So those are some things that we looked at from a metrics perspective.
Awesome. What about you, Jacinta? How do you look at metrics? How do you select the metrics that you're going to look at? And how do you inform your team of the metrics? Because I think you touched about a little bit about this conversation with your team, being transparent about the metrics too.
So a few different thoughts. One is it depends on the stage of the company. So when it's seed and Series A, I over-index on marquee accounts and number of logos to seed the market, not CEDE, but SEED, the market. So so there's some mix of revenue, but acknowledgement of the importance of key logos or volume of logos. I personally really like having a clear percentage that said for every deal you close, you get 3%, and the accelerators. I think it's really important to that be the first line in somebody's quota document is the exact percentage they get on deals, because sales folks, while not coin operated, I believe they're success operated, but still money matters. And actually being able to say, okay, for that 10 million deal, I will get 300K. It's very motivating. So I like to keep quota plans very simple. But then some kind of MBOs at the Series A seed stage around number of logos or some attribution of the commission to number of logos. The other thing is, and this could be a little bit controversial. So I got capped, so I went into selling when I was 21 and I got capped when I was 22 because I earned 300% of my target. And that really hurt. So I have fought against it, as a sales leader for that never to happen to any of my people. And making sure, and this is hard because I don't know any CFO that likes paying, 3 times OTE, and I understand. However, I also never want to be in a situation where there's going to be any pressure for anybody to be capped. On the flip side, I have had situations where I have readjusted quota when I felt that I'd gotten the market dynamics wrong at the beginning of the year. I have campaigned to actually lower quota or shift some of that percentage or some of the variable to MBOs when I felt that person could be more successful and more helpful to the company by focusing on logos rather than achieving the revenue number. And that sounds like a contradiction because I'm saying on one hand, I fight against people being capped or changing quota plans mid-year, but on the other hand, I do. So I'm interested, Baz and Matt, on your thoughts on that controversial topic.
Yeah, I mean, just one small note from my side on the point of capped commissions. It kind of ties back to the exact question I was asking you guys earlier, right? Like, if it's efficient payout relative to revenue created, while I appreciate that a CFO might hate writing a check that is 3x what they expected it to be, if it's at the level of efficiency that was modeled out, like, we should want to pay that one person 3x what we expected to pay them because they brought in, more than 3x what we asked them to. So I like you am very much in favor of an uncapped commission plan. And I think it's really important for a lot of reasons, trust in the team notwithstanding, that like you don't go back on that. And that if people expect that they will earn for every deal above goal, that you don't come to them the 15th of the following quarter and say, hey, actually, great job, but those last 5 deals or 3 deals or 2 deals or whatever don't really count from a payout perspective. I mean, look, I think, we've been in good markets and bad ones. You generally have a conversation around uncapped performance in bull markets, and you typically have ones around like reallocating focus and corresponding payouts in ones that are under more pressure. I completely agree, JT. Like, I've had times where I've had to, die on the hill of wanting quotas reduced because we got it very wrong, and that wasn't the fault of our rep. So I think it's really important. A lot of, this philosophy of reps aren't coin operated, reps are success driven. Reps also care about the level of value they're bringing to the organization and the level of trust and respect that leadership places in them. And being able to defend, a bad quota decision by asking for a change is essential too when the time calls for that. I think it's definitely an exception. And it's really easy to get into a habit of, well, because we're not trending, we're going to want to trim. I've seen that kind of become a vicious cycle at organizations. If you do it once, there's an expectation you'll do it again and again. And so you have to figure out how to kind of like thread that needle correctly. But if the assumptions that went into modeling quota change because the world around you changes, then it's fair to expect that the output of that should change too.
Yeah. I'm in a no cap camp as well. But I do think there are situations. What I've seen, it's been largely segmentation issue. Like, we field the first strategic team. We're going to put a $2 million net new target out there. And the first deal they get into is a $12 million deal. Well, that's the strategic segment, and they closed the business, and we honored the quota and the commission. Although I will say, because of the cash flow aspects at the time, we held some of that quota or the commission payment. Just kind of decided to split it, which is always in the commission line. It's always in the letter, by the way. Company reserves the right to make adjustments in payment as necessary, but that's more of a cash flow issue. What I have seen, and where I do see, and then I'll talk about, I think, quota adjustment. Sometimes it's segmentation. Like if, I'm selling into a mid-market and somehow a huge enterprise deal happens into my pipeline, I've had to sit down with the AE and go, hey, we'll pay you on this if it closes, but you have to understand, you're now going to vault to 80%. And that unit kind of came in the back door. To your point, Baz, it wasn't modeled that way. It was modeled around the assumption you're selling into companies of this size, and you got this huge behemoth that is a bit of an outlier, and it creates a tough scenario. I want you to close it. I want to pay you on it, but that's ultimately not what your plan was built around. So, and that can warrant sometimes individual adjustments. I've adjusted quotas up where I think we missed the opportunity. It was specifically in an expansion, upsell, cross-sell type hybrid environment where the amount of expansion we under anticipated the impact of putting sellers on that versus CS at the time. And they went crazy, and it was valuable revenue, but not quite what the intent was. It like the mix ended up off. So we adjusted targets there, but I've also adjusted targets down even last year, to your point, JT, when you, and Baz too, when you miss the market, either pipeline wasn't there, or you're a step ahead in what you expected, or we didn't have the right enablement, so we didn't have the right ramp. So it was like pipeline and skills were missing. We had to make adjustments down. And I remember, 10, 15 years ago, that was a non-starter. Any adjustment of quota was just not allowed. Now I was lower in the organization, so that's probably why I was told that. But I think it's vital as leaders, because it and you started with this. I have to believe I can achieve this, and for me to stay engaged and excited to sell. And if the target seems unreasonable from the get-go, you're going to hang on to someone for X months, but they're going to start engaging elsewhere because they don't feel like they can get there.
Yeah, Matt, that point is so valuable though, and I'm sure all three of us have seen this. It's counterproductive to have too big of a gap between like what you expect the rep to do and what they believe they can do, to the point that, you kind of end up in this like worst case scenario of people not thinking they're going to get in the money and performance that quarter. They might not sandbag necessarily, they'll just give up, right? And they'll just write it out. And then all of a sudden you're stuck having a rep on payroll that doesn't have the motivation to really drive towards anything. Yeah. That's the worst possible place to be. I'd rather overpay a little bit to keep motivation than, be carrying effectively dead weight, rightfully. That's a really tough balance to get right.
Yeah. Well, and they're not excited about it either, right?
Yeah,
It's not.
it
It's
shouldn't
a
be.
great time in their career. If you think about it, they're for all purposes, achievement, cash, the whole 9 yards. They're planning their next move to where they can get into an environment where they can really start to move things.
Yeah, and that's important, right? Like it's not a one-way street. They're giving us their time and making the decision to trust our organization and our sales kind of motion with their skill set. Like it's not just execute until the gig is up. There needs to be some proportional motivation for them to hitch that start to your sales playbook.
Yeah, and an unmotivated rep is not just the cost of the rep, it's also the opportunity cost of that territory that they own that you don't have proper driving into if they're checked out.
And the impact on the team, because it absolutely impacts the team when they see that is them. It's one of those things. It'll impact others. Well, they don't really care. Why should I? Right? Or they're not as dedicated as I am. Why do I want to work that hard? It has both impact. But you're right. Yeah, the territory for sure.
It sounds like transparency is definitely something very important for Quota, because you need to communicate the metrics and show the reps how they're achieving or not achieving. And I want to ask, because since it's a lot of data, not a lot of numbers, how is technology influencing quota setting nowadays? And let me start with Bas. How do you see technology influencing setting quotas today?
I just type into ChatGPT and ask what I should put on the page. Look, it's a great question. I mean, more data is not always necessarily going to drive better outcomes. I think, candidly, a lot of what I've seen, which can be a trap not to fall into, is we have a lot of signals that can help us understand what leading indicators should drive what results and what outcomes. We're tracking a lot more stuff today than we were 5 years ago, 10 years ago, whatever. And again, it's tempting to just consume all that and try to use it for the purposes of quota setting. The reality is the fundamentals, I don't really think have changed all that much. There's great tools out there. Yeah, there's great, things that can make the commission tracking process easier. But the reality is the underlying data we're using is effectively similar. It's inputs and output. So I haven't seen it transform quota setting too much. What I have seen it be immensely helpful in is the actual operational headache that is managing commission plans, quotas, and payouts on the other side. I have I have arm wrestled with a number of finance teams over the years to get quotas set on time, plans out on time, and then payouts processed on time, because especially at the early stage, it's so fluid and it's such a competing set of priorities that it often, kind of falls lower on the totem pole. There's been cool tools that I've seen in the market that help just make that process a lot more streamlined and easier. And to me, that's been the biggest win.
So what about you, Jacinta? Have you seen any improvements brought by technology to quota setting or quota management?
So quota tracking management, absolutely. And it's really, so I go extremely low tech in having conversations with sales reps about their quota. Just to say it should be a conversation, not something that they get, something automated from financing. This is your quota. So I just wanted to say that at the outset is it's a conversation where I talk to the rep about what their view is on their achievability of their quota, and what they need in order to achieve it, and kind of just trying to set them on a path of, motivate them that they can do it, but listen to them and what they need. And I think I've seen in a couple of companies I'm in where that was done automatically, spit out of a comp management system. And I don't think that's the right way to do it. However, in commission tracking and payouts, as Baz was saying, that I've seen huge advancements there. And what I love is commission dashboards. So sellers can go in and see exactly how much they made in Q1, how they're tracking for Q2, how much they're, based on deals done. That's hugely motivational. It's a dashboard I used to visit, at least a couple of times a week. And I love those.
Yeah, we call that the second screen of sales, and everyone's had it for years, that spreadsheet up on the second screen from a motivation perspective. And I think I agree. I love how literally Baz, you took the question, because you're right. There is no system out there that you put in all your historicals and presto, it pumps out the exact perfect quota with AI that is, it hits JT's 100% average and optimizes efficiency, and that would be amazing, right? But it's not there. I agree. I do think the concepts of transparency and visibility, and to piggyback on what JT just said, it's the confluence of revenue outcomes and commission outcomes that I think are the next stage of this. So we use Clary as a simple example. There's lots of solutions out there for that. And all of the solutions that we tend to leverage, technology week on week, day on day, are company outcomes, if you think about it. And I talk to my CRO customers about this all the time. It's like, here's how much you'll produce for the business, right? Of course, there's your quota, but it's also, and that's where I really want to see us weaving in personal outcomes, and even in the management conversation. So, to your point, you're reviewing a deal or a set of opportunities for a period. Let's look at the company bookings and revenue drivers, but let me see right in that same screen, how much money do you make on this? And hey, should we spend a little extra time on this one? Because this is your biggest commission grabber for the quarter. Yeah. Why don't we ensure we do a couple extra, strategy sessions, exec outreach, board outreach, because this one will pay your mortgage and allow you to go take the trip you want to take. And it's pulling that data, and we're very close to having that. We've got that integrated in some workflows now, but ultimately right in forecast is where I want to see that, because I think it keeps, and it gets back to the AE and their outcome as well. And I think that's the kind of the next big move, but it is behavioral. It's not, strictly here's the perfect quota for you, so to speak.
Yeah, I love the way you say that, Matt, about sitting with the rep and saying, look how much you can make, and really drilling into it. I love that point.
Awesome. So we are running out of time in here. The last thing I'm going to ask my CROs is for a key takeaway for our audience. Pre-length, something very quick. Let me start with Baz. Do you have something that you really want the audience to walk away with today?
Yeah, I mean, find the balance between what the company needs to do and what's reasonable and what's realistic based on, actually, let me rephrase that. Don't just put out a quota, have a path to quota that is very, very clear for your team. Show them how you expect them to get there, not just where you want them to go.
Awesome. What about you, Jacinta? Do you have a key takeaway that you want the audience to walk away with?
If you're managing reps, take their variable comp achievement as part of your number and your goal.
That's a good one. What about you, Matt? Take us home.
I ended up with 3. So the stage you're in matters as it pertains to quota planning, which JT you made earlier, but I totally agree. There's different times for different approaches to it. I think we have to assume some efficiency gains period over period when we're setting. So even if the market's down, maybe we can get more efficient to go even on quotas. And I think like all metrics now, the world is not moving at a 12-month pace. You have to constantly be revisiting your targets, your objectives, the outcomes and results, and make adjustments along the way, or you will lose people. You will lose their minds and hearts, and then you'll lose them altogether. So it's important to do that.
Awesome, thank you. So we are going to wrap things up in here. Audience, thank you so much for joining us today. You are the best part of MSP. Speakers, thank you so much for all this knowledge. I see some comments already in the chat from the audience saying that they love everything that you talk about here today. Audience, while the speakers and I hang out backstage, the MSP team will make sure that the recording for this event is available on our website. And once you're there to check the recording, make sure you're checking the upcoming events and register to all of them. Speakers, it was a pleasure talking with you today. I have so many notes in here. I'll have to cut them down for my follow-up email. So we can go hang out backstage. Audience, it was a pleasure having you here today. Speakers, it was a pleasure talking with you today.
Thanks, everyone.
Thanks, everyone.
Thanks all. This was fun.